Hello and welcome to Big Deal. I'm Nisha Podar. Now, as we gear up for an action-packed year for deals, let's find out the themes that are picking up and what's driving the investor sentiment this year. Let me welcome on the show Prashant Mehra of Grant Thornton Bharat and Gaurav Ahuja of ChrysCapital. Gentlemen, welcome to CNBC TV 18. My first question to you, Prashant. Of course, Grant Thornton Bharat has authored a very exhaustive report marking all the deals and the trends that were seen in the last year. In summation, what is the insight that you draw from the report, and what are those key themes for 2023 which are carrying forward to this new year?
Yeah. Thank you, Richa, for having me as always. Um, I think the report really talks about, I don't want to talk too much about the past, but we need to understand that 2023 was really an aberration, seemingly, but actually it was a normal year because we're comparing it to 2022, which was an aberration and it was a post-pandemic. What didn't happen in 2 years have culminated in 1 year, and that's why the results were an aberration. But 2023 has been a complete normal year, even though there may be seemingly some declines there. As far as going forward is concerned, I think India is in a very unique place. Besides the geopolitics that is going around in the world, all our macroeconomic factors are positive. Inflation is under control. GDP growth is 6.57%. Forecast is positive. Sentiment is right in the market. Some correction here and there, but otherwise stock markets are positive. IPO activity is booming. It was just about the sentiment, which I think will, get over in the next couple of months, and we will see activity back on track. Already, I think we're seeing a lot of activity, traction, which is happening, but all that culminating into closure of deals, which is what is critical, should happen soon after the budget gets over.
All right. So many important, events also lined up in this particular year, which could really cast its, impact on the deal trends as well, because the economics are dependent on that. Gaurav, jump in on this. What are the key drivers for the deal street from an investor point of view for this year?
So I think, look, I'll start by saying that I fully agree with Prashant. I think India is the bright shining spot in an overall weaker global environment. Macro is looking good, as Prashant mentioned. I think for us, we focus on a few key sectors where we specialize. These are
Yes.
sectors like IT services, financials, pharma, as well as consumer. And all of these sectors continue to offer us great opportunities. We've also expanded our sector coverage to include healthcare services, new economy, as well as SaaS. You had Akshat on your program a few weeks back, talking about the first deal that we've done in that space. So we like all of these sectors, and we'll continue to look at both minority as well as control transactions in each of these sectors, depending on where the risk reward seems more attractive to us. But just given how underpenetrated India is, or these sectors are in India, there is still a long way for each of these sectors to continue growing.
Right. And when Gaurav, you talk about India being a bright spot and you have a choice of sectors, what are the key also parameters in terms of economies and macro as well as micro, which could be the biggest deciding factors for an investor? We have election risks coming in, not just in India, in the US as well. Going forward, there is geopolitical risk as well, and then there is interest rate turn that everybody is looking out for. So what are those factors and the outlook for 2024?
Yeah. So on the US interest rate point, I think that actually benefits India because if you look at what the US private equity industry has delivered over the past decade or so, a lot of it has been driven by easy liquidity. It's been driven by near zero interest rates, and a lot of those trends are now reversing. So what used to be tailwinds for the industry are becoming headwinds, which will eventually make that market less attractive relative to a market like India, and so you should see more capital flowing into India. Now, coming to the micro, I think, look, sectors will go through their cycles. We saw financial services go through its own cycle during the pandemic. You're hearing of some sluggishness in the IT services sector because of just a weaker global macro. Some of these sectors will go through these cycles, but I think when you take a longer term view, which is what a private equity investor does, we still feel there's a lot of room for potential to continue to deliver excess returns through investments in these sectors. What's really exciting about private equity today is the fact that we are seeing greater receptivity from founders. We are seeing more opportunities to buy out companies. And you'll see this is a trend that's playing out in the overall private equity market. And this is helpful because it allows the investor to drive some of the agenda at the company, whether it's growth, whether it's professionalizing, whether it's using M&A as a strategy to expand the company's product portfolio or the services portfolio, bring in global best practices, really make good businesses great businesses. That's
Yes.
what's exciting on the micro, I would say, for
Yes.
the private equity industry.
That's right, Gaurav. And in fact, private equity players are more focused also on buyouts, as you mentioned, and there is a great receptivity amongst the Indian promoters as well. Prashant, what do you have to say about M&A and buyout situations? And last year, private equity actually exited by a huge volume, and the investments were rather lesser than that. How are you seeing this trend for this year?
Which I think the trends will be very similar. To me, there are really three primary sources of capital. There is foreign direct investment, which Gaurav spoke about, and India being that bright spot, bright shining star with the geopolitics that's playing around the world. I know it's a very interesting year with three of the largest economies, India, UK, as well as US, going into elections in the same year. Not sure when it happened before. So it will be interesting to see how that plays out. But I think that does not deter India from being that place which will continue to attract a lot of investments, and I think more so in 2024 and going forward than what we've seen before. So that FDI will have its own role to play and will be very critical for the country to grow, largely happening in the evergreen sectors, mostly around infrastructure as such. I think the second source of capital, which is private equity, will also have a major role to play in the mid market and the mid to large corporates, where there will be consolidation, healthy consolidation. And because acquisition financing is still not allowed in India, that will be seen as an alternate means of capital. Ultimately, private equities would want to invest in these companies, as Gaurav mentioned, see good businesses becoming great. And then is the third source of capital that comes in, which is IPO, which we've seen a great traction as far as 2023 is concerned. And that traction should ideally continue when good businesses become great businesses, or as we say in accounting terms, a great revenue model becoming a good business model and being validated, um, and has the numbers and has the story to go to a successful IPO. So I think all these three capital classes will have its own role to play. And India
Yes.
is in that position that we should not really look at from a year to year basis. That's the mistake that we've done for some of the global economies. As long as there is sustainable growth, these cycles will continue up and down. But I think the overall story looks pretty good and attractive to me.
That's right. People are talking about next 5 to 10 years of secular growth for India. And but I would also mention that a lot of cyclicality about the deal street trends is dependent on the equity market and how buoyant it is. So because of its buoyancy and the higher valuations, there were a lot of exits last year. A lot of IPOs also came into the market. And in this year, whether or not that sustains will define whether M&A picks up or not. But Gaurav, talking about the valuations, now several of the private equity players have shared with me that equity market valuations have made conversions and investments very difficult, not just in public market companies, but even private market, because of the huge discrepancy in the valuation. So therefore, the deals have been a little stuck. What's your view and what's the trend for this year?
Valuations continue to be a risk factor. I think investors need to be disciplined, and India will always be an expensive market. I think there are lots of dynamics that allow it to trade at the multiples that it does. Our return on capital is higher than most other countries in the world, equal to to where the US is. There is a lot of entrepreneurial spirit, and of course, there's a lot of growth still available. So I think those are some of the factors that lend themselves to the high valuations that we see in the Indian markets. India has always been a premium market and will always remain a premium market. I think from a deal making perspective, typically, when you see these types of multiples, what we try to do is at least look for areas that may be undiscovered, that are underappreciated, take a contrarian view, versus the market to try and find more reasonably priced assets. And that has worked well for us in the past.
All right. So that valuation mismatch and valuation of the equity markets on our radar to see the trends on the deal street. Hold your thoughts there, gentlemen. We'll slip into a short breather on Big Deal and come back with more discussions and also the exit opportunities, one important basis of investor entry into the market. Stay tuned to Big Deal. Welcome back. You're watching Big Deal, and we are trying to catch the trends coming up on the deal street for this year. Prashant Mehra and Gaurav Ahuja are with us. Now, Gaurav, talking about your own strategy for ChrysCapital, what is it that you are looking at for this particular year? You've talked about the various trends as well as the focus areas for yourself. But what will be one strategy that will pick up, and also the theme for this space?
So I think I would say that we do have a lot of exits that are planned for this year. You would have also seen that there are a few IPOs that are slated for this year. So I think there's a little bit of a focus on exits this year, but that doesn't mean we are not actively deploying in the market. I think we will continue to look at the sectors. We cover a lot of sectors now, and so even if a couple of them are seeing sluggish growth, there's always opportunities in other sectors to deploy capital. So for us to be successful, we have to continue to maintain a consistent pace of investment rather than try to time the market this way or that way.
All right. So exits opportunities would be one important area. Now, Prashant, last year was actually a breakthrough moment for India, for private equity, and especially global private equity players over here, because they finally saw that the Indian markets can give them an exit on the platform itself without having to do a strategic sell down. And that is something that the private equity really capitalized upon. What is it that you're looking at in terms of the exit opportunities and the pipeline for it?
I think, Nisha, as Gaurav mentioned, I'm also aware there are a number of companies which are planning for IPO. All these companies have become great businesses. I think this is a cycle that comes really every 7 years or so. Last time it came was about 2005. We got a year or two delayed because of the pandemic, but this will again come back in 5 years when private equities reach that 5 to 7 year period in which companies mature and it becomes an IPO story for them. There are a number of companies that are lined up for an IPO. I personally don't see the IPO market settling downwards in the next quarter to 2 quarter. At least for the next 6 months, I think we will see an upward trend in terms of IPO. During or around the elections, it may die down a bit, but it should come back again in September, later into the year. So completely upbeat on the IPO activity.
Yeah, but Prashant, till the elections, are you seeing a softish approach on the IPO side, or is it going to be buoyant irrespective of the political developments?
Not really. I think we still have a couple of months to see some great IPOs coming into the market.
Right. And Gaurav, what's your view? You also have some portfolio companies through IPO, those exit opportunities. Of course, Mankind Pharma was one such partial exit by ChrysCapital in the years gone by. But What about new age companies? Several of the private equity firms like yourself have invested in the late stage growth of the IPO bound companies. How are you seeing the valuation expectation and the dynamics and the success parameter after the kind of experience we have seen in the past?
So that is correct. ChrysCapital has invested in a few new economy companies, and these are companies that have achieved market leadership in their particular space. You're seeing stable unit economics, as well as you're seeing either profitability or a very near term path to profitability. And so I think you know these companies should be welcomed by the public markets, just given that some of the dynamics that I just mentioned. And so we're excited that a couple of them will be hitting the public markets this year.
Right. And in other exit opportunity scenario, M&A has been muted, Gaurav, last year. Are you seeing that particular trend picking up? You did mention that promoters have been more receptive, but for this particular year, are you seeing a lot of M&As really coming to the market, and also in the new age companies where VC investments will remain muted is mostly the verdict coming out from the market?
So I would say, it's hard to characterize for 1 year because, if you look at private equity exits, however you want to cut the market, it really depends on what's happened in the past 3 to 5 years, right? So if when you think about uh, private equity selling to another larger sponsor, that what happens in a particular year will be determined by what happened 5 years before that, because that's when the first investment was made. So I wouldn't look at a 1 year trend and say M&A has been muted or is going to pick up. It really depends on at the micro level, what are the companies out there, what stage they are in, what is the stage of the what is the holding period for the private equity fund that has invested in that particular company. A lot of these factors play out before determining, is it the right opportunity to exit or not.
Right. And what about your analysis, Prashant, on the M&A? Is it going to be, compared to last year, how are you seeing the trends picking up this year? And the sectoral themes, which sectors could be more active?
I think M&A is not something that really follows any kind of seasonality. It follows some kind of cyclical thing. My view on M&A for the next 3 years is that there is one theme that will drive M&A in India, and that's going to be consolidation. I think in the last couple of years, two, three things have happened. I think the market has understood that there is nothing like a technology sector, but technology is an enabler,
Yes.
which can be from a upward, downward, left, right, whichever integration perspective. That throws a lot of opportunities for consolidation in the market. I think the other thing that we've seen is the fact that that Gaurav also touched upon, that while revenue models are fine, but business model is something which is critical, which means that are you making money on the bottom line, which perhaps can happen through consolidation in the
Yes.
market. So overall, for the next 1 to 3 years, consolidation is something that will drive M&A. Whether that happens in this year or half of this year and part of next year is something that only time will tell.
That's right, Prashant, and not just in new age sectors, which may be struggling for cash and looking for better business models, but we have seen in the old economies, sectors as well, M&A and consolidation has been a theme, and in fact, media and entertainment saw a lot of consolidation in the last couple of years. That is also one of the themes. But Gaurav, when we talk about your investors, the LP community, given the interest rate scenario right now, of course, is the interest rate cycle being turned in this particular year? Is that getting baked in? And second, how easy or difficult is the fundraising environment for the firms like yours?
So, as it relates to US interest rates, like I said earlier, it is it is going to impact returns in the US, which will then automatically make India look relatively better. And so you should see more uh, funds funds flowing into the country because of that. There is another interesting pocket of capital that has emerged more recently, which is the domestic pool of capital. And there we are seeing a couple of trends playing out, right? One is, of course, wealth creation in India has been significant. Businesses have grown, operating cash flows, free cash flows have grown. And there has been some amount of monetization through IPOs, through trade sales. And a lot of this wealth is now starting to get organized into formal family office structures, which are professionally managed. And the intent here is to diversify or create additional streams of compounding, for the families. And so you are looking at family offices trying to build well-crafted investment portfolios. So that's a big trend that could benefit private equity in India. We're also seeing that people are getting more and more comfortable with long-term, locked-up, blind pool type of structures, which is what the kind of structure that private equity typically operates in. And that coupled with the fact that there is a policy framework, there are AIF structures that allow for this capital to get pooled. I
Yes,
think bodes really well for private equity on the looking to raise domestic capital. It's
yes.
certainly something that we are keeping an eye on, and it will be part of our next fundraise.
Okay, very well said. And two very key themes you touched upon, Gaurav, the family offices and their, urge to spend. And they have a lot of cash and they want different pools of investment as well. They want differentiated products to come in. And the alternatives, again, picking up very fast, and various themes are being encapsulated on that. So thanks for that. And Prashant, many, many important takeaways. Looks like this year is likely to be as robust as last year on the deal street. Thank you so much, Prashant Mehra, as well as Gaurav Ahuja, for joining in and giving your insights on the deal street for 2024. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.